Hey everyone, Steve here from 11ish, a channel where we talk about lucrative but sound investment strategies and opportunities based on the requests from the 11ish collective. Today we're going to talk about Sea Limited, a stock that most of us Westerners have never heard of, but is a big deal in Southeast Asia, and a ton of hedge funds are holding onto the stock. In the past 6 months, it's already grown 3x, and there's a good reason for it. In this video, we're going to talk about what this business does, what are its pros and cons, and how it might fit in your portfolio for the next 3 to 6 months. So, if this is the type of content you've been looking for, please hit the like button and let's get started. Sea Limited is a holdings company from Singapore. It's taken a page out of the Chinese playbook by tackling 3 pillars. You've got e-commerce, you have digital payment, and you have gaming. It's no surprise that 25% of the stake is held by Tencent. We're making more online purchases because we have to. We're making a lot more digital payments because that's part of e-commerce. And lastly, we're bored at home all the time, so therefore we play a lot of games. These 3 things have a huge amount of growth potential during COVID. And on top of that, Southeast Asian markets, they're a growth potential in general. Analysts say that the market size will triple by 2025. So all of these combined makes a company like Sea Limited a huge growth potential. And we see this point validated by the fact that their top line is growing like a startup and they have complete disregard for the bottom line. As you know, when I invest in explosive growth opportunities, this is exactly what I look for. I don't care about the bottom line at all. They need to capture the market as quickly as possible. You might say to yourself, Alibaba is already in the Asian market, why should there be another one? But the fact of the matter is, the Sea Limited CEO is incredibly shrewd, creating a mobile-first product because his thought is that this is going to grow the market faster, and also creating a customized, localized user experience that has made their app, Shopee, the #1 downloaded, #1 used, both in the mobile and the web e-commerce business in the Southeast Asian community. This has beaten out the Alibaba product, Lazada. To put this into context, in 2018 they were doing a single-digit revenue, and in the last quarter of 2019 they did more than 300 million in the single quarter. So the growth is there. The second growth opportunity is their digital payments business. So far they've done $11 million in revenue, and that is puny. I mean, give you a context here, right? Tencent did $3 billion a quarter. And so as long as they're not butting heads with Tencent, the largest digital payment business in Asia, as long as they're not butting heads, there's a huge amount of growth opportunity here. I think the chance for synergy is strong because my hypothesis is that there's a reason why Tencent only owns 25% stake in this Southeast Asian company. Nationalism is very, very strong in Asian communities, and it makes more sense for it to be, localized and customized the right way, as opposed to it being run by a Chinese company. And so if Tencent helps Sea Limited grow its digital payments business alone, the upside of just that one pillar is going to be immense. There is already indication for positive synergy between Tencent and Sea Limited, and this is in the gaming industry. Both of them are in it, and Tencent is helping Sea Limited bring titles into Southeast Asia. League of Legends is one that everyone knows of. This helps Sea Limited create eSports in Southeast Asia as well, which is also an upcoming market. The last thing I want to say about gaming is that you really only need a one-hit wonder to make a shit ton of money. Think Angry Birds, Candy Crush, Call of Duty, League of Legends. I mean, Candy Crush went public with Candy Crush and then sold the business to Activision for $6 billion. The thing with creating a successful title is that either you need a lot of time and a lot of resources, or you need the right collaborative partners. Now, this company is an incredibly juicy opportunity in my opinion, but there are 2 red flags that I think you should be aware of. The first red flag is that even though this company has consistently grown its top line, it has missed analysts' expectations quarter over quarter. And if you saw my fundamental video about how I read numbers, that is a huge red flag. Because to me, this gives me the impression that he doesn't really care about what analysts think. He cares about growing the business, which is a double-edged sword. Unpredictability is not a great thing for investors. The second thing that's concerning is the fact that it's been consistently growing its top line, but at the same time, the bottom line, even though I don't care that it's negative, it's been going more and more negative in a very relative fashion, which gives me the impression that perhaps they're spending a shit ton of marketing and perhaps going through price wars. If any of you actually live in Southeast Asia, please let us know if my hypothesis is correct. But ultimately, it looks to me like they're going into a price war with Alibaba, for example. If they're trying to capture the market as quickly as possible, like Alibaba is, and also they're spending a lot of marketing dollars to do it, or if they're cutting cost of products to capture more of the market, like Amazon did in the beginning, it is a hugely positive sign in terms of growing quickly, but also is a dangerous game to be playing when your competitor has super deep pockets. On the flip side, the fact that the board includes the former trade minister of Singapore and the former trade minister of Indonesia, and that there is 70 hedge funds holding onto the stock, the risk seems to be lower and lower by the minute. If I've ever seen a deck stacked in a company's favor, this will be it. It's got everything going for it. It's got the right leadership, it's got a shit ton of money, it's got the right backing, and it's got the right board. And at the same time, I think this is a good long-term investment as well. But the caveat here is that we have to keep a very, very careful eye in making sure that we are aware of what the competitors are doing, especially Alibaba. We want to know whether Alibaba is putting more money into this problem, whether they're backing off, which make this even a more enticing opportunity, so on and so forth. So all in all, I will be putting my own money into this stock because this is too good to pass, even at this current price. I think this is an incredible investment during COVID, especially as we watch COVID cases ramp up. This is also why I've actually sold my casino stake. Even though I believe in it, this is not the right time to play casinos right now. I don't want to be holding the bag as we watch COVID play out in slow motion. I'd rather I play a stock that has a huge amount of growth potential during COVID and after. Alright guys, I hope this gave you a little bit of insight on how C Limited might work in your portfolio. If you have any questions or concerns or requests, please leave a comment. And if you haven't done so already, please hit the subscribe button. Thanks for watching, and I look forward to working with you next time.